Assalamualaikum and hi everyone. Our group has two Zhulian Corporation Berhad, Caring Pharmacy Group Berhad, Darby Berhad, and Cocoaland Holdings Berhad for this project. Firstly, we look at Zhulian Corporation Berhad. As you can see, the weekly return rates of Zhulian for the whole 3 years has a range of 26.51%. The risk return on this stock, as measured by variance, is 12%, while expected value is 0.15%. Then we look at Caring Pharmacy Group Berhad. The risk of return on this stock, as measured by the variance, is 17%, while the expected value is 0.49%. Cannabis stock return has a negative skewness of negative 5.8953. With the negative skewness and negative expected rate of return, it can be said that this stock is unstable. Okay, lastly, we look at Cocoaland Holdings Berhad. Cocoaland stock return has a positive skewness of 0.7007. This means its rate of return distribution has a frequent small loss and a few extreme gain.
For relationship of the share return, we can see that if we compare the portfolio of Zhulian and Caring Pharmacy, it gives the highest covariance and correlation coefficient at 0.0002 and 0.1166 respectively. This indicates that the portfolio combination between these two companies will give a higher positive return when compared to other combinations. In order to build the optimal risky portfolio, we need to compare the best portfolio combination consists of portfolio of 2 assets, 3 assets, and 4 assets. We have set a minimum requirement of at least 10% allocation of capital to each asset. After maximizing our Sharpe ratio, portfolio of 2 assets consists of Zhulian and Caring gives the highest portfolio return at 0.46% with a Sharpe ratio of 10.99%. For portfolio of 3 assets, the combination of Zhulian, Caring, and Cocoaland gives the highest portfolio return at 0.42% with a Sharpe ratio of 10.69%. And lastly, for portfolio of 4 assets, which consists of Zhulian, Caring, Darby, and Cocoaland, give a portfolio return of 0.31% with a Sharpe ratio of 8.2%.
Good day. In constructing the optimal complete portfolio, capital allocation decision is made by allocating the overall portfolio to safe assets versus the risky asset. This decision involves maximizing the utility score of the complete portfolio. Based on our analysis, we found that for a complete portfolio of 4 risky assets and a riskless asset, the optimal investment in the optimal risky portfolio is 89.76% for risk-averse investor, which is much lower than for risk-neutral and risk-seeking investor. While for a complete portfolio of 3 risky assets and a riskless asset, the proportion that should be invested by a risk-averse investor is only 5.25%, which is very much lower than the other 2 types of investor. Finally, for a complete portfolio of 2 risky assets and a riskless asset, all 3 types of investor have the same allocation of 100% in the optimal risky portfolio. Here we can conclude that more risk-averse investor, they have less proportion of the optimal complete portfolio allocated in the optimal risky portfolio. As for the alpha, beta, and R-square values of the 4 shares, Darby has the highest beta value, indicating that it has the highest sensitivity towards market return.
As we can see from the slides, we can conclude that Zhulian, Caring, and Cocoaland has about the same relationship with the market. Whereas for Darby, we can say that it's a little bit different, but the correlation is 0.2580, which is actually the highest among all the other shares. And Darby is the only asset that has a negative alpha value, which means that the stock is being overvalued, and also the stock fails to generate return at the same rate as the broader market index. From the data, we can see that Zhulian Caring combination has the highest trainer ratio and Sharpe ratio values, with a value of 10.99% and 0.73% respectively. And for the highest Jensen's alpha value, Caring Cocoaland combination has the highest value, which is 0.53%. And Darby Cocoaland combination is the only combination that gives out a negative value for trainer ratio and Sharpe ratio, which are negative 2.95% and negative 0.13% respectively. And among all of the combinations, Zhulian and carrying gives out the best expected return, and we choose Zhulian carrying combination as the best portfolio we've built.